Well, let's get more, because we do, of course, have these European debt issues really at the moment front and centre once again, with the Dutch, of course, here. A government falling, and we've got a Dutchman to discuss all this. He's Herald van der Linde. He's from HSBC. Thanks very much indeed for joining us. Well, what do you make of this? You know, it's kind of like you've got to cut, but at the same time, people want to know, where's the growth going to come from?
Yeah, this is not only a problem in Holland, right? What has happened in Holland is that there was an unstable kind of government anyway, whereby a third party gave support to a minority cabinet. And now some big decisions need to be taken, and that's very difficult, for them to proceed on. And that third party says, I don't want to make these particular decisions, and therefore the government falls, and there you go. So you have to go to the Queen.
Absolutely, and then we've got the Asian side of things. We of course, here then are engaged in the sell-off that we're seeing elsewhere around the world. You know, is it warranted?
In a sense, yes. There is a couple of data which is coming through which doesn't necessarily look very good. US data is rolling over a little bit. We have some big bond auctions coming up in Europe. There are some issues which are now coming over to us as well. But on the other hand, if you look at Asia from a slightly longer term perspective, valuations look not too rich, actually, still pretty okay. Earnings growth, I think, is going to recover. So
it may not if we see further slowdowns in the US or indeed in Europe.
Yeah, indeed. But I still think even if the US, of course, if we would fall off much more than what it is right now, and we would see economies really slowing the numbers further, then there would be a risk. But even if the US and Europe stay pretty much where they are at the moment, I think actually Asian earnings can come through quite well into 2012 and 2013.
Yeah, I mean, I'm just reading your research, and you're saying that your valuations here have gone back to their 10-year average, and it's down to these inflows of capital that we've seen, not just US dollars, but also, of course, the inflow from the LTRO program.
Yeah. So we've seen last year there were a sell down of about $13 billion in equity markets across Asia. This year we've seen inflows of $27 billion. So that's people have basically doubled up on their positions which they sold last year. And a lot of that is going to Korea, India, Taiwan. And that has pushed these valuations back to almost back to what you just mentioned, the 10-year average there. There's still another 5, maybe 10% to go for valuations to really reach that level. So that gives us a little bit of upside. And as I said, I think earnings growth, which is now factored in at about, say, 10-11% across the region, I think could surprise on the upside actually as well.
Right, but how much of that has already been priced in, given the rally we saw in the first quarter?
Yeah, not that much actually. I think if we're going to see earnings upgrades, the markets will be able to carry it a little bit higher, but it will not happen in the next couple of weeks. This is something which will gradually play out throughout 2012, and in the next week the focus seems now to go back to what happens in Europe, and maybe later on what happens in the US as well.
Okay, what about, you know, capital expenditure here? You know, where are we with that cycle as well?
Yeah, this is the interesting thing, I think, in Asia. If you look at the output gap, we are just a touch below. That means that supply is there.
Yep.
Yeah, what that means is actually that demand is a little bit below supply, but if demand recovers a little bit, and we get fiscal policies in place, lower interest rates across the region, if that then would happen...
Well, how much room is there for these governments around this part of the world to actually be cutting rates? I mean, we've got China, perhaps the one which has got the most leeway. Yep. I mean, we've got India, where they've already said that it's going to be very difficult for them to be cutting rates.
Yeah. So the issue for them is that inflation starts to return. This comes exactly back to what you mentioned. Because we don't have ample supply across the region, we're going to hit these limits quite quickly. Inflation returns, and that means that the Asian corporates need to invest more. And I think that capex cycle will then very slowly start to come back as well.
Harold, just 5 seconds, what top pick for an equity market in this part of the world?
I think it's actually a good time now to look at China. Valuations are cheap, interest rates are coming down. I would be quite selective on the sectors I would look at, but I think China is the way to look for.
So, what sector would you look at?
Consumer discretionary looks very good to me.
Not even staples? Beyond staples?
No, I think it's over-owned actually. Consumer discretionary is under-owned, valuations look better. I'll go for that.
Harold, thank you very much indeed for your time. Harold van der Linde from HSBC.